Good morning, everybody. This is Latoya Paul, your mentor, and I want to go back to a video that I did about a year ago. And for those who are new to trading, I want to give you a way to make it simple. Um, and as far as understanding and not having to wait so long to be able to uh, take trades. I know I definitely don't promote practicing with real money. I always promote practicing on the demo accounts. Um, but you need to know how to practice. You need to know the best way or one of the best ways to practice. And so the video that I talked about, if you can go back, I think sometime within, it'll say, if you look at all my videos on my page, it'll say 1 year ago. But in that video, I talked about the slope of the moving average and how it helps to um, help us see which way we should be trading. Okay, so for example, um, with where we are now, we should have been trading within the last hour or two. Actually, really from here, we should have been selling. Everything should have been selling. Why am I saying that? Well, looking at the 50 and the 100, the 50 moving average always will change directions, change direction before the 100 because it is a less amount of days that are being averaged, right? That's why. So the lesser the moving average that has the least amount of days will always be the most active one. So with that in mind, I look at the slope when it went from positive to negative. It happened overnight, right? And I'm using this line to show the zero slope. So at the beginning of the new trading day, the slope was already negative, heading downward. So honestly, if you want to be technical, you could have been selling all day. So imagine all day you just sell. Everything is a sell, right? Now obviously, you know, where you sell is important, but um just imagine if you had the right. Now I've been saying also with gold to divide your capital by 1,000 to get your lot size. So let's just imagine you came out of the gate because you have this understanding. And you say, well, I'm gonna give it a shot. I'm gonna just sell. Everything is the slopes of the 50 is selling. And then also the slope. Matter of fact, where we at? I'm gonna just create a new account. Actually, yeah, I'm gonna do it. I'm gonna do it different. I'm gonna create a new account real quick. And I'm gonna just sell right now to prove my point and see where we end up uh, at the end of the video. Might get a pullback, but I'm just gonna, prove my point, right? Just prove my point. So capital is 1,000. That's why I like practicing because that way I get to apply the same things that I'm teaching. So I'm going to sell. I'm just going to sell with the dollar and see where we end up from where we are now. Obviously, I'm saying we could get a pullback, but and I'm gonna just sell. I divided my capital by 1,000. All right. So now let's just say for the sake of seeing it and how profitable this would be, right? If you just sold all these, so you sold here, you probably got about three good trades. So you sold there, 120, sold here, another 160, that's 280, and then you sold here for like 500 plus. That's about $700. If you would have made about 700 some change, if you were trading at a point one, if you had $1,000, right? Now, Um, the best places to trade after the moving average goes positive or negative will be when price comes, either when price comes back into that zone between the two moving averages, or you get a break and retest after, either after the cross or after uh, the separation of the two moving averages. Sometimes, depending on how, there's always a break, there's always a retest of the moving average, but you might not see it on the time frame you're in. Okay, so like if we look right here, uh, this was yesterday or 2 days ago. There was no retest of the moving average on the 15 minute. But if I put the my vertical lines here just to see, and we go back to like the M5, we go back and see if there was a movement, a retest or a touching, and you can see it was close. Now you know for sure if you go to the M1 in that same spot, you should see some type of reaction. So we had, this is the M1. So you got to touch, 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 touch. Yeah, one touch, two touch, three, four, five. So you had enough touches to see, all right? And they were all in the same trajectory as far as moving averages pointed up. So if you don't see it on the small time, if you don't see it on the time frame you're in, you will definitely, it's definitely happening on a time frame that is lower. Okay, so um, let's see here. So yeah, the slope is very important. Um, Let me see if we got another one. All right, so here's another one. Slope went from 0 to 50. Always, the 50 always changes before the 100. I'll say that again. The 50 always changes before the 100. So here's another situation where you have 50 changes, and from this point on, you could have been just not even knowing what's going on. From this point on, you could have been, I would say, honestly, right there, you could have been selling all of that. All of that should have been sold. And you got one and then two opportunities for the sale. Now, I would definitely say the pullback to the 50s are good, but the pullback to the 100s are better. But just being able to have that have the insight to know um, that you can get in a trade because of the sloping of it. Okay, even with this one, you got the slope will always go, it'll go from positive to negative, from negative to positive. So this one is where the slope goes from negative to positive. All right. So anything after this, you could have been buying. You did have a major pullback to retest here, but I think for the platform that I use, you don't feel this. It doesn't allow you to feel this wick. If anything, you have to deal with this. But if you're trading at 1,000, if you're trading dividing your capital by 1,000, you shouldn't have to worry about this. This is not 1,000 pips. This is 78 pips. All right. And then you have another obvious one here where it continues and it begins to show you an obvious change. You got the obvious change, everything is up. Then you got a range here. So um, let's go to see if we can find something that's a little bit more complicated. A little bit more complicated. So you have just looking for slope. You don't want to see positive go to negative. So you once you get the zero, even with things like that, this is the confidence you have to have. And this is why I I, I explained to divide your capital by 1,000 because you can handle the swings in the market because you're not getting 1,000 pips off a pullback. You may get 1,000 pips in the day, three, 4,000 pips, depending on how volatile the market is, but you're not going to get that type of pullback, especially if you're trading in the right direction. So positive slope to negative slope, price breaks through the both moving averages, and both of these slopes are beginning to go negative. That's 240 pips. That's 240 pips before the moving average cross. And which is good to know because sometimes the pullback to the moving average cross can be blown through, or it can be like this one where it's short lived. Okay. So just knowing that this 240 pips could be $240, 2,400, 24,000, 240,000, 2.4 million, 24 million, 240 million. That's where it can grow into. Just knowing that, right? Looking for zero slope. It gives you the heads up that you need to be able to take advantage of this simple strategy. Nothing is complicated. So everything after this point, all these moves, really, you could be selling. Every time price comes and touch the moving average, that's an entry, entry. Even when the ones that go higher, entry, entry. So depending on your capital, that's a one and done. If you got $1,000, especially, and I'm definitely getting ready to do this. I was talking to a good brother of mine, and he was telling me that I should, give prop firms a try. That way, I can have my live account. I can grow my live account exponentially because of my ability to leverage and find trading opportunities. But I should use the prop firm money to have that consistent discipline money that comes to help uh, with any other type of investments or just adding to the pool of my personal capital. So uh, I'm going to give something a shot, and then if it works, I'm definitely going to let you guys know. And it's going to be through. I'm going to try to use Klarna to pay for a prop firm account that's very substantial. Uh, right now, my available Klarna loan capability is like 500. And I looked at FXify, and they have one. I think they have 100K, or one phase 100K account for like 350 or something like that. So I'm going to give that a shot, probably if not this week, next week. And if it works, now I do have the Klarna card. I did get the Klarna card, which is a Visa card that you can use anywhere. But I want to test it out to see if it works. Because if it works, then that'll be another way to leverage other people's money without having to put so much of your own money down. So that's just getting the heads up. The slope allows you to get the heads up. All right. So you had one here, you got another one here. All right. Now, even with this one was cool, but because it's the end of the day, I want to see what happens the next day because you can have a multi-session W where price comes back down here, which is very likely. But when you see it happening here, you'll be able to mark it up. And most times it'll be afterwards, after you see it. Once you see it, you can just go for what you know. You see it going up, it breaks. You got all this. This one trade would have been 460 pips, 460 pips, and then you have um obviously we know break and retest, but this is more so the heads up entry that you could take before you even got to this. All right. So anything after that would have been opportunity. So what would this be? This would be 1,200, 1,000 to 1,200 pips on one trade, right? And so you see the swings. You see the swings. The swings are there to help you to see the slope. And I know we looking for divergence, we're looking for convergence and all those different things. But I want to give you guys this because I believe that this is a way for the beginner to be able to um, practice something in demo. Like you need to know what to practice. You need to know how to practice just by looking at slope, taking advantage of the slope. You see that going from zero to negative, everything should be selling. You can sell this whole thing, right? Now, obviously, you got to be able to see that it's going to come back and grab the liquidity, but You can get in and get out within an hour or two. Real simple. Get in and get out. All right. Now, like you see something like this, it's taking its time to set up. All of this is slow. It's just going straight down. So well, that's 400, 400 pips. That 400 pips, if that's $400, not without swinging a hammer, without punching the clock, right? And I always like to make it sick because you got to show people the the reality of the information when I apply it correctly. So, um, as you all can see, we it's going in that direction. We may get a shift depending on 8:30 may come. We may get a shift. So what I'm gonna do is I'm gonna put this in profit and just let it go because, like I said, it is 8:30. We should get some type of shift. Uh, I don't know why, but most times 8:30 comes, it goes super volatile. So it may push down, it may push up, but always protect your profit. If you got some profit, always protect it, especially um in between the changing of the sessions. The 8:30, 9:30 the 8:30, 9:30 Eastern Standard Time, always protect your accounts because you don't know what can happen. And it's better off to break. It's better off to be closed out than to try to figure out how to recoup losses when the market goes for its run or goes super volatile. So let me see here. We have market going from negative to positive, moving average, 50 moving average moved first, right? And then this is one of these situations where you had a 2 day setup, a multi-session uh, W. You had a low here, came down, gave you a low here, and now it took off. So anything above this, you could have been buying. So let's say, for instance, you got in after this push. That one trade is 950 pips. It comes down, the slope is still up, right? And this is the cool thing about slope. You put the cursor on the moving average, look at where the moving average comes out. If it comes out at that top right quadrant, which would be the right top corner of the cursor, it's positive. If it comes, you put the cursor on the moving average and it comes out of the right bottom quadrant of the cursor, it's negative. So in this case, it's positive. So you got 940 pips there. And then this one went for 1100 pips. And then the day uh, this one went for another 748 before it turned negative. All right. Um, so let's see something else. I have this moving average goes from positive to negative. So anything after this technically could have been a sell. Anything after this point could have been all sales. You got in one trade, let it go. That one trade would have been 1,000 pips. All right. And then you have going from positive, slightly negative, back positive, and then the moving average separate. That moving average separation is key to seeing what you can do. So anything after this point could have been buys. You could have bought here. All right. When that moving average first happened, when that moving average cross first happened, slope changes. That first high is definitely going to get eight. When you see that first high is definitely going to get broken through. Even vice versa, when the moving average changes and you get from going from positive to negative, that first low is definitely going to get broken. It's definitely going to get broken. Okay, so it's really simple, but I'm learning even on trying to stay on one time frame. By the way, that You have to continue to look for better ways to do what you want to do. So positives and negative slope, anything after this could have been a sell. So you're talking about one trade. If you just let that one trade go for 2 days because it kept dropping, that one trade was 2,200 pips, right? Then you go from negative to positive. So anything, even though it's trading against a trend, anything after this point would have been a sell. All right, now here's the thing: when you're trading against a trend, the high may be retested because the overall goal is to go down. All right. Now, if you was able to get in at the break and retest of this, okay. But that this high, because it's a continuation, a bigger continuation of a bigger move on a bigger time frame, you wouldn't have made much on that. All right. So negative, positive to negative, didn't pull back here, but it pulled back to the 100. We already know that's a good trade. 1974. Um, but like the best time to do this is the best time to look for these opportunities is right after the moving average cross or right before, because you'll get a low and you can see how even with the lower low, the low that changed it, the moving average was more involved in that price. And you got to look for ways to see that. You got to look for ways to see how it can be. Okay, for example, this anything after that was definitely a sell. And this is like a pre a pre entry before you get these. You know, these are the entries that this is like the first class of airplane tickets before all the other ones come, right? Because you get a better entry, you get a safer entry, and you just using slope, right? That's all you're using. You're using slope, nothing else. And because you're using slope, you're not falling for what could be a possible. Because a lot of times, and I've done it, a lot of times you're looking for an obvious M or W. You're looking for a pullback to the previous high or previous low. And things like this will happen where you'll get a move and you get nothing but lower lows, lower highs, and then it drops back into where it's coming from. But if you were going off the moving average, you will be fine. Even with this one, you're looking for it to come back down here. But if you were going off the moving average, you'll be fine. That moving average is more clutch than retest because you're not going to always get a retest of price, but you will get a change in the direction. Okay. So with that, I'm gonna let you guys go. I hope you guys have a great day. I'm gonna post this to the YouTube channel, and then I'm gonna post it to the Facebook group. But that's all for now. You guys have a great day.